Gone are the days where the market move in an uptrend or a downtrend. If you're a beginner trader and you feel because you've just watched 1 or 2 YouTube videos, you're good to go, you're just going to sit on your PC, wait for a trend to form and then trade along the trend, I'm sorry to break it to you, you're going to be waiting for a long period of time. This is because the way the market moves now is very, very different from how it used to move. Before, you can see a market in an uptrend and then you trade along the trend, or you see it in a downtrend and you sell along the downtrend, right? But now, the market now creates structure, breaks structure, looks to fill out area of inefficiency or area of imbalance in the market, and then it targets liquidity, which brings us to our topic of the day, which is the power of 3. The power of 3 simply means that if price is going to be moving to the downside, price is going to first accumulate, then price is going to manipulate to the upside, assuming there's an area of inefficiency or area of imbalance price intends to fill out at the top right here. Let's say, for instance, a fair value gap. Then when price fills out that area of inefficiency in the market, price is going to distribute through to the downside. So that's it. First, we have the accumulation phase. Then we have the manipulation phase. After the manipulation phase, we have the what? The distribution phase. Here's it. If price wants to sell to the downside, price is first going to accumulate, then it's going to manipulate into an area of inefficiency to fill out a fair value gap, or it's going to manipulate into an order block at the top, and then it's going to use that to distribute through to the downside. If price wants to move higher, price is first going to accumulate. This time around, price is going to what? Manipulate to the downside to fill out an area of inefficiency in the market before distributing to the upside, assuming there's a fair value gap or order block at the bottom. Here's the representation. Price is going to accumulate, then it's going to start manipulating to the downside to fill out an area of inefficiency or to manipulate into a fair value gap, and then price is going to distribute to the upside. Now, this is not just like any other pattern that you just learn and then you start looking for it in the market, right? The explanation behind this is that price is accumulating, which means that price is struggling to continue going higher. Price starts to manipulate to the downside, tricking traders that is going to continue going lower, and also hitting the stop loss of all the long traders, because if you're going long from this point, you're going to be placing your stop loss below here. So what does price do? Price is going to come down, hit your stop loss, and then it's going to trick traders that is going to continue going lower from here. That's the noob traders, and then those noob traders are already selling from this point. Then price manipulates into this other block of fair value gap, and then it starts distributing to the upside, taking all the sell traders out, and also it has taken out all the traders that are going long. It took them out, and then it's also going to take out all the buy traders as well. So that's it. That's basically how the market moves. It does not want anybody to make money. It wants to take money from everybody. That is why you have to be very, very smart, right? You don't just see this and just learn this and go and start applying it. You need to understand what is going on here. Let's move to the chart and check some examples. All right, this is the Euro USD chart, and it's open in the 15 minutes time frame. And what I can see from here is that price has been moving to the downside, respecting this trend line. You can see first touch, second touch. It has literally been moving to the downside. Anytime it trades close to this trend line, it has been moving to the downside. And what we can see right here is that price has broken this trend to the upside. So what do we expect? We expect that price is going to continue going higher. But then you can see that price is struggling to continue going higher from here, which means we have our first phase, which is the manipulation phase. Our swing high is right here, and our swing low is somewhere right here. Remember, we want to be buying from where? I want to be buying from a discount zone, right? So now, if we divide this range into two, we have our discount and our premium zone, right? Our discount zone is always at the bottom, our premium zone is always at the top. Now, what can we find in our discount zone? We see that we have a fair value gap in our discount zone. We have a fair value gap right here in our discount zone. The reason why we are not going to be using this imbalance right here is because it's inside the premium zone. For a better risk to reward ratio, we want to be using the fair value gap inside the discount zone. Now, one tries to manipulate into this discount zone, fill this area of inefficiency in the market, and then distribute to the upside. Now, let's see the second phase. As you can see right here, price has done its manipulation, which is the second phase. This is the manipulation into our fair value gap. Now, I want to start buying from this point, right? We'll start buying from here. And where do we always target? Stop loss below the swing low, targeting a risk to reward of 1:2. Let's see how that plays out. As you can see, price has hit our take profit. Very, very easy. Price did the accumulation, manipulated to the downside, and then distributed to the upside. As easy as that. Now let's take a look at a different example. All right, this is GBP USD and it opened on the 15 minutes time frame. And for what I can see right here, price created a structure and then broke it to the downside, which means that price changed character to the downside. You can see price created this structure right here, traded to the upside, and then we can see that price broke this structure to the downside. We have the accumulation phase right here. So now what do we expect? We expect price to manipulate to the upside, taking out this liquidity and also trading to this other block right here. For those of you that don't know, another block is an up close candle that strips liquidity that leads to a break of structure right after it, right? You can see that this is the last up close candle that swept liquidity that led to this break of structure. So we expect price to manipulate into this other block zone, not closing above it, and we expect price to manipulate straight to that point, and that is what we are going to use as our entry. Let's see how that goes. As you can see right here, we have our second phase here, which is the manipulation phase. As you can see, price has manipulated to the upside into our other block zone. Now we are going to take a sell from here, a short position. We take our short position from here. Our stop loss is going to be at the swing high right here. We are going to target a risk to reward of what? Of 1:2. Let's just say 2.5. Right? Let's do that. So now let's see how this trade is going to go. You can see how price accumulated, manipulated into our entry, and then distributed to the downside. The ICT power of 3 is a very, very strong concept. Let's take a look at one more example. All right, this is GBP USD open in the 5 minutes time frame. And what I can see right here is that price is doing something like the accumulation phase, which is actually our first phase. And we're expecting price to do what? To manipulate into a fair value gap, because we have a fair value gap at the bottom right here. We have a fair value gap right here. And we're expecting price to manipulate into our fair value gap to trigger our entry before we target a move to the upside. So let's see how that works. As you can see, price has manipulated into where? Into our fair value gap. So we want to start buying from here, right? We want to start buying from this point right here. Stop loss is going to be below this low right here, below this low right here. And then our target is going to be a risk to reward of 1:2. Let's see how that plays out. Okay, now we just hit stop loss. Now let me tell you something. The fact that you understand the power of 3 does not mean that you're going to make profit all the time. You understand the power of 3, there's also a possibility of getting it wrong. Now, if you look back in time, you can see that price has broken structure to where? Price broke structure to the downside. So when price is breaking structure to the downside, means we are supposed to be moving down. So we are not supposed to be targeting buys, but sells instead. As you can see, price broke this structure to the downside. So now we want to be targeting what? We want to be targeting sells and not buys. So now what does that mean? That means that this is not our accumulation phase. This was our re-accumulation phase right here. This was our re-accumulation phase right here. And it's manipulated into this other block, this green candle, before the break of structure to the downside. So this was the accumulation, this was the manipulation into the other block. So we would have taken what? We would have taken a sell from this point right here as price manipulated into this other block. Stop loss is going to be let's just say 15 pips, targeting a risk to reward of 1:2. Right now you can see that if we have done this correctly, we would have hit TP pretty much very, very easy, right? Price did what? Price accumulated, manipulated into another block, and then distributed to the downside. Now it's very, very, very easy to get this wrong, right? You can see how first explanation was very, very wrong. Now this is the correct explanation. Because price broke this structure to the downside, I want to be looking for sells and not buys instead. Now I just use this example to show you guys that because you've watched this video does not mean that you understood the power of 3 very, very easily. There's always a possibility of getting it wrong. You just have to understand that price is going to break structure first. When price breaks that structure, it's going to leave an area of inefficiency at the top or at the bottom. You just need to know the one you're targeting. Price is going to take out liquidity, fill out that area of inefficiency, or target another block and use that to distribute to the opposite direction. Backtest the ICT power of 3 until you understand it, and I promise you, you are going to see results in your trading. Peace.